are security tokens and STO. Definition: security tokens are digital version of securities, confirming ownership and giving the owners the rights on realizing their investment interests, rights for shares, dividends, profit share, etc. These rights are written in a smart contract, and the tokens are traded on exchanges. The turnover of security tokens flows according to legal norm of financial regulators in different countries. For example, Securities and Exchange Commission (SEC) of US or Swiss Financial Market Supervisory Authority (FINMA). Founder of Morgan Creek Digital, Anthony Pompliano, in his article "Official Guide on Tokenized Securities," defined security tokens as digital assets following federal laws of securities. It is something in the middle between tokens and traditional financial products. He also describes security tokens as a programmed ownership right that can be applied to each type of asset: public or private capital, monetary obligation, real estate, etc. Purpose: due to specific nature of security tokens, they are viewed differently from the legal perspective than to so-called utility tokens. The latter are popular among ICO organizers, representing a means of gaining access to the goods or services of the company. Unlike utility tokens, security tokens are tied to real securities, meaning they are considered a financial investment, and additional regulatory requirements are imposed on the companies issuing them, including filing reports. Security tokens also solve one of the biggest problems of ICO: the lack of compensation guarantees in case of project failure or scam from the organizer's side. In addition, they serve as a risk hedging tool with an investment strategy, such as simple agreement for future tokens, SAFT. This model is considered to be more secure, as it gives accredited investors the opportunity to purchase tokens right after the launch of the project. However, it is still associated with certain risks. Investments are made not into tokens, but in fact in a promise to receive them in the future. What is STO? A widely popular opinion is that security token offering, STO, is the next evolutionary step that will take ICO's place and will change the vector of industry development for a more regulated and transparent market. But STO and ICO are two different mechanisms of attracting investments, which are used in different situations. First of all, issuing of STO is supposed on following all the regulatory norms of securities. This is for providing better security of investors' rights and reducing regulatory risks for tokens issuers. Besides, STO is being oriented for another audience. In this type of issuing, only professional investors can participate. This category, according to US legislation, includes individuals who meet at least one of the following requirements: annual income of more than $200,000 per person or $300,000 for a married couple, maintained over the past 2 years and projected in the current year, in which the person plans to make investments. Net assets of more than $1 million, which do not include the value of real estate, where the person lives on a permanent basis. An organization that has assets in excess of $5 million, for example, a venture or trust fund. A company whose members are all accredited investors. In addition, there are tons of technical details that the investors need to know for proper participation in STO and for the organizers to raise funds. In particular, for launching STO in the United States, issuers must take into account the Securities Act of 1933, namely several of its provisions: Provision D, Provision A+, and Provision S. They describe various scenarios in which companies can offer investor securities, security tokens. Advantages. One of the main advantages of security tokens compared to traditional financial products is getting rid of third parties' involvement, such as banks or other organizations. This implies on creation of a completely different space for investments and deal-makings. In his article, The Security Token Thesis, professor in finance of Oregon University and Howey Project advisor, he attracted $28 million of investment for creating a protocol on issuing and trading security tokens. Stephen McKeown lists of such key advantages of this type of active. Markets are accessible 24/7. Share ownership. Fast transactions execution. Reduced transaction costs. increase of market liquidity, ability to automate compliance procedures, simplifying exchanging trading operation with such assets, ability of creating an ecosystem for tied services. Disadvantages. Crypto industry, if mostly applies to ICO, is often compared to Wild West, where the strongest or cunning one survives. STO, in turn, as was mentioned, operates the other way around, but that means the achieved before advantages are also being lost in the process. High entering bar. As the investments into security tokens assume the participation of only accredited investors, a significant part of crypto community is instantly being left out, including some law-abiding participants. Higher expenses of issuers. Despite reducing transaction expenses, STO launch is associated with significant bureaucratic red tape, meaning extra expenses on lawyers and other specialists who will assure smooth project launch. Therefore, due to the high costs, STO is more suitable for companies that are in later stages of development, round A and above. The above-mentioned Anthony Pompliano, in his work on security tokens, also suggests that the flip side of the coin is that when the intermediary is removed, its functions are transferred to the buyer and seller. In particular, he draws attention to the fact that parties traditionally responsible for preparing marketing materials, attracting investors, ensuring a high level of compliance with the regulatory requirements, and successfully concluding a transaction are excluded from the transaction. However, you can easily argue with the statement. Many companies successfully develop their own marketing departments without giving such questions to outsourcing. Where are security tokens traded? Despite the fact that this direction is considered promising, the possibilities of investors are still quite limited. Different platforms and businesses show their willingness on working with these tokens, including large platforms such as Binance, as well as major stock exchanges like Nasdaq. Nevertheless, at the beginning of 2019, there were a very small number of licensed trading platforms offering similar tools. Among them is the T0 platform, which officially launched in January. The first token that started trading on T0 was Kodak Coin, designed to serve the Kodak One digital image platform. This token allows professional and amateur photographers to receive payment for licensing their work, receive a share of the total income of the platform, and sell the ownership of their work using the Kodak One secure platform. At the end of 2018, Harbor launched a platform to distribute security tokens, inviting investors to register to buy shares in the Hub residential complex in South Carolina. 955 shares were put up for sale in the form of security tokens for $21,000 per unit. Other startups specializing in technological and financial solutions for this sphere could also be mentioned. For example, among the creators of the SRC20 protocol, which is considered the cryptographic standard of security tokens, liquidity provider, and other solutions for this area, we can distinguish blockchain capital of Brock Pierce, Polymath, Securitize, Templon, Securrency, Open Finance Network, and Orderbook from AmbiSafe. However, during 2019, the situation may change significantly, and it is assumed that competition in this market will increase noticeably. Is this asset a security token? Traditionally, SEC disposition is very important of how you should define a security. To understand the point of view of financial regulator of US, let's return back to Florida state of 1946, where Howey Company Enterprise, who had owned orange plantations, suggested an unusual proposition for investors. The idea was that investors will be buying a part of land with a plantation, and Howey Company in turn will take a lease on that land and give their clearly stated obligation of working there and pay part of the profits of their farming work. However, SEC didn't approve this deal, calling it an investment contract, and stated that there is condition for participants being appropriately secured. But Howey Company challenged this decision, arguing it being just a land selling. This case ended up in the US Supreme Court, which took side of SEC, and that was the beginning of the appearance of the term security. As a result of this legal dispute with authorities, a so-called Howey Test had appeared that classifies transaction as security if investors have a positive answer for the following four questions. Money investment is a fact. Profit is expected. Money are invested in a regular enterprise. Any profit in the amount depends not on the investors, but on counteragent or third parties' promoter effort. This same exact test SEC is using nowadays for ICOs and tokens, and if all the aforementioned questions are positively answered, then the project plans on investing money into investment, in our case security tokens. Future of security tokens. Despite the fact that a number of projects are still desperately trying to avoid a situation in which the tokens they issue are classified as securities, the general trend is changing into this direction. It is good or bad, but now we don't have a clear answer. On one hand, the arrival of institutional investors, namely the accredited investors, can fundamentally change the entire of the industry and give it an important impetus for development. On the other hand, it is necessary to remember that, by their nature, security tokens are fundamentally different from cryptocurrencies in their usual sense. There's a big part of the community which categorically refuses to accept the new rules of the game, offering its own solutions based on the Bitcoin blockchain and not without reason believing that the future truly lies in the distributed network with its powerful security mechanism in the form of a proof-of-work algorithm. At the same time, you should not discard players who will continue to adhere to principles of traditional ICO. They may go to other jurisdictions, change some of the rules, but generally will continue to offer investment opportunities for a wider range of users. However, the trend is obvious, although the transition will not be easy. In addition to the need to comply with the rules of financial regulators, the development of this industry also requires the creation of necessary infrastructure. Many people believe that STO is what the market needs in 2019, and looking at the nearest prospect, some people already have their thoughts on what will be the next driving force in 2020. If you want to make money with crypto trading, join Bitseven.com. Link is below. Subscribe to our channel and like our video.